Hey guys, Killstokes here. Welcome back to another Weekend Trading Edge video. As always, it's time to take a look around the markets and share a few of the best trading ideas that are on my radar for the week ahead. Now, I am recording this a little bit early this week. It is a Friday afternoon since I'm not going to have time this weekend and I don't want to leave you guys without the vid. So just understand that things may look a little bit different by the time this gets to you. And I do want to focus more on the higher time frames, the daily charts specifically. That way there aren't too many differences in what you see. We got about 9 or 10 pairs to look at today across different markets. So we'll just kind of go down into order that I have them listed, not into order of which is the best opportunity. So we're going to start here with the euro dollar. This one should be familiar for you because we've spoken about it in the last, I think 3 weeks. I even did a mini video during the week looking at how we can take advantage of this opportunity. But if you are new and you haven't seen the other videos, this was the AB equals CD pattern that we had coming down into a previous level of structure. Here is our A to B, our B to C is this retracement right here. Then we connect the dots with the CD retracement, giving us a nice little projection down here at our previous level of structure. Now, although price action did trade below that level of structure, you can see the wicks down here. Boom. Nope, wrong thing. There we go. Boom, boom, boom. We did not violate. And remember, by violate, what we mean is a break and close below. So if I just take a horizontal line tool here and draw it at the low of our structure zone, you can see although we spiked, we did not violate. So I still have a bullish bias on this from a technical perspective. We've been in consolidation because of the war stuff that's going on, but these are pretty good signs for a bullish hold. Now, they're not enough to take the trade in my opinion. If we want one more clue, what I would love to see is either a break and close above our previous bar, which if this bar closes today, it would be above this bar, or a break and close above the high of this consolidative range. That would look something like this. If the market were able to give us something like that, and we could look for the same thing on a lower time frame as well, a break and close above that range, that would be a positive sign for a push forward. On the lower time frames, again, we looked at two levels, the higher level being right here. The level that I personally had on my radar was right here. But if you are trading this on the daily, then that smaller level isn't going to exist. And we can certainly look for a move back up to our previous level of structure support. See how the market hit this 2 times, right around here about 117.5 or a little bit lower than that. Next is going to be the euro yen. This is going to be very similar, but on just the lower time frame. So you can see the consolidation that happened throughout the week here on the daily. As you drop down to a 4-hour, you're going to see the same situation as the euro dollar. Price action came down, and then pretty much this is what we did all week. Now, this is great for advanced pattern formations. We had a lot of them this week. So if you are a pattern trader, again, advanced patterns, harmonic patterns, they tend to form in periods of consolidation. However, consolidation doesn't last forever. Eventually, price will break out, and that's what we're looking for here. There are 2 breakouts that we could be looking for, one to the upside, one to the downside. The upside is a little bit more clear, I guess you can say, but the downside would be a breakout of this yellow line right here. And if we were to break out from this level, I would expect us to go back down to our previous structure lows around here, around 181 even. If we broke out to the upside, we would need to see a break and close above this level, this 183.25. And my expectation is that we would travel back to retest this area right here between 183.75 and 184 even. So right now we're just in wait and see mode here on the euro yen, predictive in our analysis, reactive in our execution. And well, once the market shows us its tell, we can then look to take advantage of it. Speaking of pattern formations, the dollar yen has a massive pattern formation forming here on the daily. You can see the big W in front of you. It may differ depending on where you start your X leg, but if we start at the very highs right here and scroll down to the lows, this is going to be our X2A. Let me actually see if this is the same thing no matter what. It may be the same thing no matter what. Oh, yeah, I think it will be. So it won't really matter what you start where you start your X leg at. But if we start right here, this is going to be our X to A. You can see that as we brought our Fibonacci retracement on from the swing high of X to the swing low of A, we have what's called our B leg right here, and it has retraced past the 618, but has not hit the 786. So this is going to put us on alert for what's called a Gartley pattern. Now for me, how I measure out my D completion point for the Gartley is I take my Fibonacci extension tool, I drag it from the swing low of our A leg down here to the swing high of our B leg down here and back down to that same level. And I look for a completion at this 127 Fibonacci extension zone. So all in all, that's going to give us an advanced pattern formation that looks like this: X to A, swing high to swing low, A to B, our first retracement, B to C, and then a CD completion right up here. And as you can see, with our completion being so close to the X leg, we're going to have a really good risk reward on here. So if I just measure it out, we're not going to do ATR because I don't feel like doing math, but let's just take our 113 Fibonacci inversion and get our stop loss area like that. Let's get our target area like this. You're going to see a very beautiful risk reward where the entry would be right here. The stops would be right here, and the target, at least target one, will be right here. 2.3 to 1. You rarely see that with a Gartley pattern. So, mwah, chef's kiss. Following up on the pattern theme, this one not as close, but this is going to be the dollar Canada. The loonie here on the daily chart, same thing. We're going to take our swing high to swing low. That's going to be our X to A. However, you can see this time price action doesn't make it to the 618. It only makes it to the 50%, which is going to put us on alert for a different type of harmonic pattern. This one is going to be a bat pattern, and it's going to end looking like this: X to A, swing high to swing low, A to B to that 50%, B to C, the failed extension downward, and the D completion is going to be at our 886 Fibonacci retracement. So still a really good risk reward because it completes deeper in the zone. Not going to be as good as that Gartley pattern, but something I love about the bats is you do consistently have that positive risk reward. Now, real quick, this just caught my attention. We're probably super early, but this may be a Cypher pattern as well. Let me just see here. I spy with my little eye. Yeah, look at that. So bigger picture, and again, this is miles and miles away, but if you want it to get out in advance of this potential advanced pattern, there's also a potential bearish Cypher: X to A to B, B to C all the way down here, and a CD completion up at our 786. Now we're heading over to Aussie Canada. Enough with patterns. Let's get back to pure price action trading. We had something very interesting here happen on the 4-hour. We, after kind of spiking down a handful of times and holding this zone, we can see that price action indeed ended up breaking and closing below it. So if you guys are familiar with my 4-step prediction process, and I didn't invent it, just I say mine because it's the one I use and teach you guys. It's called IPDE: identify, predict, decide, execute. We want to identify what price has done. That allows us to make a prediction about what we think price is likely to do next. And then based on that prediction, we can decide if it's something that we can trade or not. So when we have identify a break and close below structure, we call that a violation. It allows us to make the prediction that price is likely to continue lower. So I've set up my directional bias. The next part of that prediction is asking myself, if price is likely to continue lower, where are we likely to continue lower to? And we can identify our next level of structure, which is going to be right down here. Then I also want to see, okay, well, now that I know that we're likely to continue lower, now that I know that, or an area that we're likely to continue lower to, what type of trading technique can I use or tactic can I use to take advantage of it? And this should be the easy part because this should be in your trading plan. Now, we just had a very interesting close here, and this makes for a perfect lesson because this is a very interesting candle. Although this candle is technically bullish, it is green, it is technically closed higher than the open, this is by no means a bullish sign at all. This is a very bearish sign. And we're going to talk about this in the upcoming workshop, perfect time to plug, right? March 17th, 18th, 19th, 3-day online trading workshop. One of the things that I will be teaching you about is how to read candlesticks and how to kind of read in between the lines and look at it from a deeper perspective than just, red or green, bullish or bearish. Really analyze the story that it tells you. Link in description below. You can sign up. Seats are limited. So I would do it now because I haven't checked today, but we got to be getting close to that cutoff point. But why I like this is because this is a very bearish sign, right? With the wick of the candle, the skinny part going up, This means at some point, right, price closed here on the previous candle. At some point, the bulls pushed it up. However, within that 4-hour session, they got beat back pretty bad. I'm talking like Crystal Palace versus Spurs. Ooh, too soon? Ooh, poll question, will Spurs get relegated? Anyway, as they got beat back like Crystal Palace did to Spurs after going up 1-0 and losing 3-1, price ended up closing at the very bottom. So although it is technically a green candle, it's a sign that the bulls tried to fight. The bears fought back even harder. And although the bulls, I guess, technically won the session, by all means, the momentum has shifted. So this is going to be a positive sign for that continuation lower. In fact, if we were trading this on the hourly, this might have been an entry. Matter of fact, as we come back into the structure, let me just go back on that. Not too much on the hourly. You'd have to go to like a 15 or a range bar chart to really see that pullback. But that's not what we're here for today. Focus, Akil. So anyway, positive sign for continuation lower. Look for a pullback and a chance to get short, or like we spoke about in the day trading video the other day, wait for a fresh break, then a pullback and a chance to get short down into that lower zone at 95 to about 94.60s. Euro Canada is in a similar situation, but the opposite situation, right? We have had a very nice run, an extremely large run. I mean, look, we have nosedives straight from 160, 170s to about 157.70s. That is about how many pips? Ooh, my gosh, almost 400 pips straight down. So you would think after that type of movement, the market may be a little exhausted. Well, if the market's going to be exhausted, if those great bear traders that made all that money from up there to down here are taking profit, where do you think they might be taking profit at? Probably our previous level of structure, which we're currently trading at right now. So the cool thing about structure is not only does this exist as a place where sellers are like, hey, I should probably take some money out the market because this has been a place where the bulls have acted before. Well, the bulls that acted before, they're saying, okay, well, we're back at that cheap level. Maybe I'll be interested again. So you see this dynamic where the selling pressure dries up, the buying pressure increases, and we see these shifts. Not necessarily long-term shifts all the time, but little areas of retracement. So that's exactly what I would be looking for here. We have a few things that can confirm this as well or bring confirmation to it. We have the RSI, the Relative Strength Index, massively oversold. So just to give you guys some perspective, the default oversoldness of this indicator is 30, which is right here where my mouse is hovering. My settings, which I look for extreme overboughtness and oversoldness, is at 20, which is that red line right there. We are down at 6. With this being an oscillator, meaning that it ranges between 0 and 100. So the closer you get to 0, the more work it requires to get closer to that number, if that made sense. 6 is a very massive number. So we are massively oversold. If you want to add any volatility bands as well, like a Bollinger Band or a Keltner channel, you can see that we have closed below those for a while now. So this rubber band is pretty much stretched out as well. All in all, saying that I do expect some type of relief at this area. Now, the hard part is going to be how to get involved. We can look for a reason for entry here on the daily, let's say like a 3-bar reversal where you get a higher high, higher close. That would be fine. However, the hard part stems from if you go down to a lower time frame, because on this stinking lower time frame, you've got a little area of consolidation, which for me personally, I would have to use as a target area. So 2 ways to look at this. One, on the daily, just look for your reason for entry. I don't think it's going to be a problem here because your target levels are back up at this level, so that's plenty of room to get a good risk reward, whether it's a 3-bar reversal, whether it's an inside bar breakout, whether it's a double bottom, what have you. However, if you want to go down to a lower time frame, I would look for a potential head and shoulders, right? A head and shoulders is a classic reversal pattern, which comes in instances just like this, where we see a long directional move, followed by a little retracement, followed by a short directional move, followed by a deep retracement. You can tell I like having fun with these videos if you're new. I'm not crazy. Well, I am crazy, but I enjoy myself, right? And then followed by a failed extension down. That would give you a head and shoulders pattern, which is a classic a classic reversal pattern, and then you can look to take advantage of the break of that neckline up to our previous level. Now, I got a cool video scheduled for next week. I think it's coming out Monday. Check it out. But it talks about the three main ways to trade and how there are only three ways to trade, and how as traders sometimes we get confused over double bottoms and head and shoulders and this and that, thinking it's all different ways to trade, and we get overwhelmed and discouraged and whatnot. But one of the ways to attack this head and shoulders trade is one of those three main ways to trade, which is the pullback. So make sure you tune into that video on Monday. It should be premiered, so you can kind of save it and see when it's live, but it's going to talk about how to get involved in these type of setups, along with other type of setups which look different, but in all honesty, trade exactly the same. All right, Canada yen, this is our fun one, right? We've been stalking Canada yen for a while because we have room for expansion. We're looking like we're going to get our break and close above this level. We didn't quite get it yesterday, but if we finish today here, we would have a break and close above. Now, you remember that IPDE thing I taught you, right? What do we predict? What can we predict if we see a break and close above? Answer it. A move higher. Our next question is, if we're going to move higher, where are we likely to move higher to? And there's a few levels right here, like a little small level that we can pay attention to. But after that, the big massive level is going to be between this zone of 117 half and 118, about 119 even. And if we wanted to make that zone even smaller, I would say about 118.24. So needless to say, there's lots of room to go higher. So if you are a trend continuation trader, wait for this violation. Wait, it hasn't happened yet on a daily. You got to wait. So this is a next week type of trade, but you can use this weekend as a chance to game plan for it. But wait for this violation of this key level of structure and look to trade it up to wherever in that zone you favor. We'll probably come back here and look at different ways to kind of pinpoint those targets. Maybe that'll be a midweek video for you guys. Next up is the DAX, right? Good old trendy DAX has given us a little bit of a retracement this week, right? You can see the higher high, higher close after this breakout. And then we kind of came back down and we are making our way towards the lows. Now, if you are a pullback trader that has a bullish bias, you are licking your chops. This is a good pullback opportunity if you're looking for a pullback trade and a chance to get long at these lows, because if these lows are violated, you know you're wrong. And if you're gonna get long, it's good to get long before the area that you know you're wrong at, because then you can have a very small risk, right? Something else you can do here is get involved aggressively with an advanced pattern formation, right? We're going back to our bat pattern. Swing low to swing high here is going to be our X to A. First retracement, hitting this 50%. That's going to be, oops, wrong tool, sorry about that. Swing low to swing high here is going to be our X to A. First retracement to our 50%, our A to B. Failed extension, our B to C. And if we push down to this 886, which nuzzles right in that zone we drew out earlier, we're going to have a bullish bat pattern. That's going to be a nice buying opportunity, either as a pattern trade in its own right, either as an entry excuse into the trend continuation, or you can dip your feet in both categories and trade it half pattern, half trend continuation. Next is oil. I made a prediction for oil when I did my podcast video about the war, and I said oil, 80 minimum, probably 100. A few people laughed at me. Who's laughing now? Me. Right? Anyway, oil is a booming. One of the worst things you can do as a trader, however, is be late to the party. So you don't want to be that person that says, oh my gosh, I'm hearing about oil, I got to get involved now. And then you get involved at the very top and it goes down without you, right? Here's something I've done before, right, in the past. I've tried to get involved in a breakout because I'm late and everyone's talking about it. I get involved right here. I'm happy. And then as soon as I get involved, let me know if you've done this as well. You can put that in the comment section below. Then it starts going against me and it retraces down, right? And then my happiness turns to sadness or throw upness as let's save this one. My happiness turns to sadness. Where's my sad thing? Here we go. As it goes down. So what do? I exit my trade to save some pain because I'm losing money, and then it goes right back up. And then I become this guy because what do you know? if I just would have stayed involved, I would have been right and made some money, and now I feel sick to my stomach. So instead of doing that horrible dance where you'll need napkins to clean up your mess, wait for the area of relief and try to time that. And if we look to the left here, you can see price action is approaching a previous level of structure up here right below the $95 mark. And if price is going to expand or extend a little bit higher, I would certainly look for this to be an area where the profit taking starts to happen. And we do one of two things. One, we put in a tight consolidation, which gives you a chance to get involved in a little bit of safety because you know where that stop loss should be. Or you get a full retracement to the downside here. And once again, you can trade it like a pullback trade. Just like that other pair we took a look at, RSI is massively overbought here at about 95. Any type of volatility band, Keltner or Bollinger, is nowhere near it. So we are at that stretched period, and I would expect some relief. Now, again, this is fundamentally driven, right? As that war continues on and the Strait of Hormuz is, doing whatever it does and supply gets altered, right? We are going to see oil rise, but within kind of the micro aspects of it, we're still going to see these normal technical moves. So, just don't let that FOMO take advantage of you. That's it for this week. Hope you enjoyed the video. If you did, hit that like button, show some support. Also, again, reminder, don't miss that 3-day online trading workshop coming up March 17th, 18th, and 19th. Seats will be gone soon. It's not a trick. We actually close them down. So if you're interested in learning how to trade and spending 3 days with us or watching 3 days of recordings, if you can't make it live, register now. That way you can secure your spot. All right, until next time, plan your trade, trade your plan. Take care. I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.